In this video, I'm going to show you the top 5 stocks that you need to add to your portfolio for April of 2025. Don't worry about subscribing, liking, or looking for the coaching and Discord link. We'll get to that real soon. Let's dive right into the video at hand and the top 5 stocks that you need right now. The number 5 stock that you need to add to your portfolio for April 2025 is Grab Holdings. This company is very similar in ways to DoorDash or Instacart. They deliver groceries, telehealth, telemedicine, and many other things in peer-to-peer, person-to-person, all in one app. Let's dive into the financials. Let me show you and explain to you why you need to add Grab Holdings to your portfolio. So looking here at Grab Holdings, you can see that the stock is kind of consolidating in the 450 to 465 range, which is where it's been for some time. We look at the market cap, and we're going to be focusing on this number because price to earnings is not quite determined. They are definitely profitable, but not enough to determine an accurate price to earnings. The forward guidance price to earnings, they have definitely released speculation on that. So while we could look at price to earnings on a smaller company like this, it would not be beneficial. We want to be looking more or less at the price to sales, which we're going to gauge by looking at the market cap, which is just about 19 billion, and dividing that by their trailing 12 month, which is almost 3 billion. So we're going to divide 3 into 19, which is really good. It's just a little over 6, but we're going to get an accurate number here. And we're going to divide 18.9 divided by 2.8. 18.9 divided by 2.8, giving us 675. Now, SoFi had a price to sales of just over 2, and they reached 8, and they've fallen back to around 4.5 or 5. And you could see how much movement SoFi had. Price to sales is very important as it's indicative of a company's potential to become profitable in the future, or more profitable, or exponential growth. When you look at this, Apple has a price to sales of 11. Tesla's is like 21. Nvidia's is somewhere in between or closer to Tesla. 6.75 is great because the lower, the better. Wayfair has a price to sales of like 1 or 1.5, which is extremely good. Grab Holdings also has a very good business model and has shown exponential growth, as you can see by their earnings going back to May of 24, August of 24, and then November of 24 into February of 2025. Very stable and consistent growth. We look at their total revenue, trailing 12 month, 2.8 is good. Gross profit is good. Operating income and pre-tax income slightly in the negative, although slight improvements over the previous quarters. We look at the EBITDA. EBITDA is strong. So even though their pre-tax and their net income is slightly in the negative, their EBITDA is strong, and that combined with price to sales signifies that in the future, there is strong potential growth there, which is very good. They have everything in order. Priorities are good in this company from what I've seen so far. And I've went over Grab before. We look at their total assets, which covers liabilities quite easily. Their net debt is negative 5.26 billion, meaning they have a negative net debt, meaning no debt at all. They're sitting on over $5 billion in cash, have a good EBITDA, good operating income, consistent growth, and a good price to sales, and a good business model. All they have to do now is become profitable. Let's gauge their cash flow to figure out what's going on. Free cash flow is almost $1 billion trailing 12 month, with $250 million every single quarter. This is also good. So we have a good EBITDA, we have good free cash flow, we have a good price to sales, consistent earnings, good business model. Everything looks good. EBITDA is strong, and they have a total revenue that is good, and their gross profit is good. So they have got everything in order. Grab is a very strong buy, and that's why I have it as number 5. The number 4 stock you need to add to your portfolio is none other than Nu Holdings. This is the South American SoFi, and it is what Warren Buffett holds a lot of shares in. Very strong position he has. I also have a position in Nu Holdings. Let's dive into the financials and look at the company. Let me show you guys why this is a stock you want to add to your portfolio. So looking at Nu Holdings, we can see they've beat earnings 2 out of 4 times. They missed slightly on this previous earnings. Let's go ahead and look at their market cap. We can see market cap is 54 billion. So what we want to do is look at their price to earnings as well, which is 28.74. Anything under 30 is good. Under 25 is stellar. So they're very good. Let's go ahead and take a look at their price to sales, which gauges future potential growth, 54.28 billion. And we're going to divide that by their trailing 12 month, which gives them a price to sales of just above 5, like right at 5. But we're going to do 54 divided by 1033. 54.27 divided by 10.33. Price to sales of 525, which is extremely good. Let's go ahead and look at their total revenue, $10 billion trailing 12 month. Gross profit, $7 billion. Operating income, $2.8 billion. Pre-tax, $2.8 billion. Net income, $1.97 billion. $500 million a quarter. Insanely good profits. We look at EBITDA. The EBITDA is $2.87 billion trailing 12 months, $788 million a quarter. All very good. Balance sheet, assets cover liabilities. We look at their net debt. They have a negative net debt of $9 billion, meaning they have $9 billion in cash, assets to cover liabilities, totally profitable, great EBITDA, and lots of potential for future growth with a price to sales of 5.25. We look at the cash flow, cash from operating activities, $11.7 billion, $4.66 billion in the quarter. We look at free cash flow. It does not show it, but quarter two of 2024, it was $3 billion a quarter. Their free cash flow is probably, just looking at this, probably somewhere around the 10 to 15 billion trailing 12-month high. New Holdings, a very strong stock to add to your portfolio right now. The number 3 stock that you need to add to your portfolio right now is Intel. This stock has made the list in the past quite a few times, but they have a new CEO now and things are looking very good for Intel. If they can increase their sales and increase sales on Foundry and continue to work towards the direction they're going right now, this is going to be a very big play in the next 2 to 3 years. This is a long-term hold, but a very good one. If Intel can even reach the price of AMD, it would signify a 5x return in the next 2 to 3 years, which is insane. Even if they reach $60 to $75, this would be a 3 to 4x return, depending on what price you have gotten it at. Even if they reach a price of $75, this would be over a 3x return right now. If you're selling puts to get in, end up selling covered calls, then you're going to make even more than a 3x return if the stock goes to $75. Let's look at the financial statements of Intel. Take a look and let me explain why this is a good stock to add to your portfolio. So with Intel, we have a $105 billion market cap divided by 53. So let's go ahead and divide 105.8. And we're going to divide this by 53.1, giving us a price to sales of 1.99. Remember, this gauges a company's ability to potentially become profitable in the future, showing lots of revenue and showing the market cap. Granted, they're not extremely profitable right now where they should be, but it shows that potential if they can tighten things up the way they need to. 53 billion, we can see gross profit, 17 billion, operating income, pre-tax income, net income, all down, EBITDA in the negative, but the trailing 12-month total revenue is there and their market cap is there. They have potential with the new CEO. If they reach their potential with a price to sales right now, which I showed you they currently have of 1.99, typically you're in the 6 to 10 range minimum, meaning there is very easily a 6 times increase in value with Intel if they reach about half of their profitability. NVIDIA is significantly higher at around 16 to 18. Tesla's even higher. Apple's 11. So even if they reach that level, we're looking at a 6x return. I believe Intel easily could reach 3, which means we could see a stock price of 75 to 150 depending on how things go for Intel. If we look at the balance sheet right here, assets cover liabilities quite easily. They do have 28 billion in debt, but even if you add their liabilities and their debt together, they still have over 60 billion to cover. So they have plenty of assets. We look at cash flow, 8.29 billion trailing 12-month, free cash flow in the negative. This is not good. They're burning a lot of cash, not bringing enough in, but the potential based on their market cap and their revenue, they can tighten things up and become more profitable. It's yet to be seen, but this new CEO can turn things around. This previous earnings call was really good. They beat the expectations and their EPS was profitable. In my opinion, I think this is a very strong buy. Long-term, 2 to 3 years minimum, I think Intel is going to do very well, especially with Foundry and the fact that they're the only chip manufacturer that is made in America, meaning all Intel's chips are made in America. They are opening up 3 new facilities in the United States, one in Ohio, one in New Mexico, and there's also one in Oregon. They produce chips in the United States, and under a Trump administration, he's not going to allow American companies to go under. I believe they also had like an $8 billion grant, which is helping fund them as well as their factories and their expansions, and their chips are made in America. And under this administration, this is very strong. So this is now the time to buy Intel to take advantage of all of this. The number 2 stock that you need to add to your portfolio, and this was a tough one because number 2 and number 1 I've been fighting, and it's very difficult for me to pick which one is going to be number 2 and number 1. It was a very close call, but number 2 is Microsoft. Microsoft is a very strong American company in technology and AI, computer, software, and gaming. They have a lot of revenue, very strong growth, and they've been recently upgraded to $450. There's other analyst ratings at $475, and right before the market pulled back in January, they had analyst upgrades of $500 and $550. I easily see Microsoft trekking into the $450 range by mid to end of year, possibly $475, and in the next 1 to 3 years, I truly see Microsoft in the $600 range to $800 range. So this is a stock that you could have a 50% to 100% return. So in the next 3 years or so, you could very realistically see a 2x return or more, and Microsoft is very safe, and there's a lot of premiums that can be made in puts and covered calls. This is a stock you definitely want to consider adding to your portfolio as it's very safe. Looking at Microsoft, it is no surprise that they are profitable consistently every single earnings call with almost $3 and at sometimes over $3, especially the last 2 quarters in the EPS. So if we look at the priced earnings, 31 is very strong, almost $3 trillion. Before the market pullback, they were over $3 trillion. It's been said by multiple analysts, including Dan Ives and Tom Lee, that Microsoft is likely to become the first $4 trillion American company on the stock market, surpassing Apple and every other company, including NVIDIA. In my opinion, Microsoft has more potential future growth than NVIDIA in a lot of ways. When we look at their market cap of $2.93 trillion, we're going to divide that by their revenue. And we look at their trailing 12-month revenue, it is $261 billion. So we got to divide 2.93 trillion, 2.93, and we're going to divide this by 261.8 billion, which is basically 262. So we'll divide this by 0.262, and this is going to give us 11 price to sales, which is right in there with Apple. So it's a slower growth stock because it's not really a growth stock, but it's slower growth than the other stocks we looked at. So looking at this, we can see that's very strong and safe, a little bit slower, but that's why it makes number 2 is because it's safer and it's more of a sure thing. You'll 2x your money on Microsoft than you will 4x it on Intel, which is why it makes it higher in this list. And it's even safer than New Holdings or Grab. Although they have way more potential growth in a short period, Microsoft long-term is safer and more of a guarantee, which is why it's higher in the list. $261 billion trailing 12-month gross profit, $181 billion operating income, $117 billion pre-tax income, $113 billion net income, $92.75 billion. Microsoft makes more money than Intel, Grab, and New Holdings combined, and then some, and then a lot more, and then a lot more on top of that, and then more. Then you add even more than that on top. Like Microsoft has a lot of money. Very good investment, in my opinion. One of the best, if not the best. It's my favorite stock overall. Total assets cover liabilities quite easily. Net debt, $31 billion. You add that, they still have over $250 billion in assets to cover. They have a lot of assets. So the cash from operating activities is $125.58 billion, $22.29 billion a quarter. This is a lot of money. Free cash flow, $70.03 billion and $6.5 billion per quarter. Microsoft is a stellar number 2 pick and so close to number 1. You guys are going to love what number 1 is because we're moving on to number 1 right now. Before we get to the number 1 stock pick for April of 2025, I know you guys are excited for this. If you are looking at growing your portfolio and becoming better in the market and making money, maybe retiring early, maybe you're losing money right now and you just want to improve your game, I would love to help you, fam. It's what drives me every single day. You can sign up for my Discord access, full training course, one-on-one coaching, and boot camps, as well as mastermind classes to help you achieve your financial goals and dreams. You can sign up at investorcorey.com. Link is in the information box below. Just click on training and you'll be able to book a call with my team and I so I can help you grow your portfolio. You can see the profits on the screen that my students have been making consistently, but on the screen, you can see students that have not only made money in an up market, but also a down market. And I showed them how to hedge their portfolio and not get psyched out and sell their stocks at a bottom now that the market has rebounded. This is vital information. And I have full training in Discord on how to manage risk, but not only risk, risk, also to make money if the market goes down, how to hedge, and how to not lose money. I look forward to seeing you very soon. The number one stock to add to your portfolio is going to come as somewhat of a shock, but this stock is the king right now and will be the king of quantum computing. Number one choice, number one pick for April 2025 is Google. Now, you might be wondering, why did I pick Google? Why not Rigetti Computing or some other quantum computing stock that has a lot more growth potential? Well, they all have to work a pretty steep uphill battle. Google already has Sycamore and Willow, and not only that, there's so much money in advertising, YouTube, AI. There's just so much power, strength, numbers, and financial backing with Google that, in my opinion, along with many other analysts' opinion, that it is going to be the absolute king of quantum computing. In fact, it's looking like Google is going to shift its focus primarily to quantum computing very soon in the future. They're going to move over from where they're at now and focus more on quantum computing. Right now, it's ad revenue, Google AdSense, Google in general. They now have Gemini AI. They have Google phones. They have Nest cameras and home security. And now they're also heavily growing and building infrastructure in quantum computing. When you connect this all together with Google Home, Google Drive, Google Calendar, Google Workspace, emails, you got quantum computing that's going to manage all of this, including your Nest and your home security and your cameras, Google ad revenue, the AdSense platform from creators on YouTube, as well as the YouTube platform. Imagine all of these brands managed by quantum computing. It is going to be impossible, nearly impossible, for any growth stock to even come close to Google when it comes to quantum computing. And with that being said, let's take a look at their financial statements and look over Google in detail. So we can see a $2 trillion market cap on Google, priced earnings 20.38. This is stellar. Anything under 25 or 30 is great. Under 25 is mostly stellar, in my opinion. This is very good priced earnings. Let's look at their price to sales. Their EPS is beaten consistently quarter over quarter. So we're looking at a $2 trillion market cap. Let's divide that by their financials over 12 months and the income statement. So we're looking at 2.08 trillion. 2.08 divided by 0.349 gives us a price to sales of 5.95. So this clearly illustrates Google could go 2x to 3x in the next 1 to 3 years. And that's based on their current business model. When you add in quantum computing, we see how AI grew. And we're only in stage 1 of 4, according to Dan Ives. It's a 4 a.m. party and we're only at 10 p.m. When you account for all the AI growth, quantum computing in the next 10 to 15 years is pretty much going to be just like that. We had the internet boom, the .com, then we have AI, and now we're going to be looking at quantum computing 10 to 15 years down the road. And when you look at that, we could very easily see Google going pretty close to a 20 or 30 price to sales, which is where Tesla's at right now. And if that happens, we're looking at a 6 to 7x return. This is pretty strong. It's a lot of growth, 5 to 6x over the next 10 to 15 years, depending on how quantum computing plays out. But just based off the actual numbers in front of us, we could quite easily see a 2x or 3x return in the next 1 to 3 years because of the AI infrastructure of Google, their Gemini, their home products, everything they offer, AdSense, ad platform, like I've said, and Google has YouTube as well. So there's all of this in there. 349 trillion 12-month gross profit, 203 billion, operating income 113 billion, pre-tax income 120 billion, net income 100 billion, EBITDA 128 billion. This is perfection. Balance sheet, assets easily cover liabilities, net debt negative 67.52. Better than Microsoft, better than everyone else except for Apple. When you look at net debt, it's negative 67 billion. Google has $67 billion in cash, and they have enough assets to cover their liabilities almost 4 times. They are sitting on so much cash, a mountain of cash, and so many assets with no debt. This is an automatic number one. No debt, tons and tons, and just heaps and just mountainsides covered in cash with tons of assets and very low liabilities. This is a very strong balance sheet. Look at the cash flow, $125 billion operating activities, and we look at $39.1 billion per quarter. Trailing 12 month is $125 billion. Free cash flow, $72.76 billion. Trailing 12 month, $24.84 billion in the quarter. This is strong. Great cash flow. Significantly good. We look at the balance sheet, super strong. Tons of assets, low liabilities, and a mountain and a heap, and billions and billions and billions and billions of dollars in cash. They could probably buy out new holdings and grab quite easily when you think about it. Very strong. We look at their income statement, is also strong. Price to sales is strong. Future growth is very strong. 5.95 shows us a 2, 3, or even 4x return, not even including future guidance and the future growth of quantum computing. But their price to earnings is also stellar at 20. Everything about Google is stellar. And India just passed, or is about to pass, a 2025 legislation that is releasing levies on Google, which is a good thing. So there's that in addition to everything else I said. Google is your number one pick for April of 2025. So this is your top 5 stock picks for April of 2025. I hope you guys enjoyed this. If you want to see the top 5 AI stock plays and top 5 dividend stocks, comment below. And remember, if you guys are starting out in the market and you're new, maybe you want to retire, maybe you're losing money and you want to learn the proper way, I would love to help you grow your portfolio. You guys can sign up for my Discord access, one-on-one coaching and training course at any time. Link is in the information box below, investorcorey.com. Click on training, watch the video. This way you'll be able to book a call with my team and I so I can help you grow your portfolio. And you can see on the screen my students that were not only able to make money in an up market, but also a down market and learn the tricks of psychology and how to not get faked out of the market. I would love for this to be you. I will see you guys very soon in the Discord, and I'll see you on the next video. Take care of yourselves, fam.